I want to thank everybody for sticking it out to the last session of the day. As Karen said, my name is Rolf Agather. I manage the research team at FTSE Russell. We are an index provider. The research team at FTSE Russell, we're the ones that develop all these great new indexes that become the basis of all these great passive products. And increasingly, we spend a lot of time doing client education and client engagement. As Karen mentioned, we're going to have the panel's going to get up and give presentations. And so I thought, one of the first things I would do is try to set some context, maybe answer two key questions as a way of setting the context for what we're going to talk about today. The first question I'm going to address is, what's an index provider doing on a panel talking about the advantages of active management? And I always want to be, I want FTSE Russell to be seen as one of the index providers who does believe that there is value to active management. There's clearly an economic self-interest here. So as much as we benefit from all the assets that flow to passive products, a big part of our business is selling data and analytics to active managers. So, just from a mission perspective, our goal is to help all investors, make better decisions and have a broad range of tools that they can choose from. So, there's that self-interest just economically. A big client base of ours is active managers, as well as just the mission that we have of improving decision-making for investors. So we really don't see, active, passive, at least from an index provider perspective, as this adversarial relationship. And so hopefully, as we have the discussion and we moderate some of the questions, I can contribute to that. So the second question, I think, for you in the audience is, what's the relevance of this to you as a decision maker? And I think there's really two dimensions to that. So obviously, for those of you that are involved in the investment decision-making process, there is a lot of information in the marketplace, or conventional wisdom, I think, as we'll discuss, about active management and whether or not it actually adds value. And so I think it's important that as investment decision makers, you're able to have a complete set of information and recognize that what might be seen as conventional wisdom may not necessarily be true. So we actually have the benefit of having a number of different perspectives on the panel. You'll be able to see, some of the academic evidence for the realities of active management. You'll be able to see from an institutional asset owner how they view active versus passive, and then even from the asset management or product provider side. So I think as investment decision makers, it's important. But also as potential business owners, right? I think you have to deal with clients who are obviously reading the newspapers and seeing some of the headlines that come out. And so I think it's important, that you're armed with some of the messaging. Should you get, questions about, well, I hear active management doesn't work or it's too expensive. I think, hopefully some of the discussion today will be useful in just arming you with some of the key messages maybe that you can communicate within your firm and to your clients. We won't really touch on it today, I don't think, but it's also interesting, right now there's also a related set of discussions going on with respect to the passive industry in general and whether or not it's becoming too big. So even though today's topic is really dealing with active and passive within the investment industry, recognize that as the amount of assets flowing to passive investments has grown, there is increasing concern among, potentially regulators about whether we are now, increasing the systemic risk within the marketplace. So, again, it's a very related discussion. I also speak on panels. I'm just talking about, the amount of passive management that's out there. And obviously, I don't think there is. I think there needs to be a healthy balance between active and passive management. And I don't think we've gone beyond that. But clearly, there is concern among the public and potentially of the regulators about just the amount of assets now that are being managed passively. So with that as a context, I'm going to go ahead and just provide introductions of all four panelists. So what will happen is they'll each get up here and they'll give a presentation. They've each got 12 minutes. They'll do that in succession. After the panelists have spoken, the music will come up and we're basically going to have the Q&A discussion. So there'll be a few minutes while we get the chairs back on stage. So after the last presentations, please don't get up and leave. We then want to have a panel discussion. And also we seem to have a bit of time here. So I'm hoping that, this is your chance to really ask questions of the experts in the field. Again, if you have questions that might help you either run your business better or make better investment decisions, now's the time to have those questions available. And we'll have, I think, 2 people in the room with microphones to give you a chance to do that. So with that, I'll start to introduce the speakers. The first one is going to be Professor Martin Kramer. He's the Bernard J. Hank Professor of Finance at the Mendoza College of Business of the University of Notre Dame, where he's been a faculty since 2012. Prior to that, he was a faculty at the Yale School of Management for 10 years from 2002 to 2012. He obtained his PhD in finance from the Stern School of Business at New York University in 2002 and hails from the Netherlands. Starting in July of this year, Professor Kramer serves as the interim dean of the Mendoza College of Business. David Lafferty is the Senior Vice President and Chief Market Strategist at Natixis Investment Advisors. He is responsible for assessing economic and capital market trends and their implications for investment portfolios. Scott Gonsolin is an investment manager on the public markets team at the Teachers Retirement System of Texas. It's a $152 billion pension system serving 1.6 million active and retired educators and their families. Scott supports the Trust's $40 billion portfolio of externally managed public market assets with coverage on both hedge funds and long-only mandates. And then our fourth speaker, Ann Lester, is a portfolio manager and head of retirement solutions for JP Morgan Asset Management Solutions, where she's responsible for advancing the firm's market-leading retirement investment product offering and thought leadership. Ann is a seasoned asset allocation specialist who has been responsible for the development of the firm's defined contribution asset allocation strategies, including the JP Morgan Smart Retirement Target Date Funds and the firm's dynamic withdrawal strategy. So again, four speakers, each with their own unique perspectives, and I'd like to go ahead and start by inviting Professor Kramer up to the stage. Thank you.